Markets in the first half largely led higher by the AI trade. More than 2/3 of the S&P 500's gains for the year have come from names like Nvidia, Alphabet, Apple, and Microsoft. Investors want to know whether or not the AI trade, of course, is still hot on the back half of 2024 here. And for an investor's guide to the second half of the year, we're joined by Dana Doria, who is the Envestnet Co-Chief Investment Officer. Great to have you here in studio with us.
Thank you so much.
Absolutely.
Thanks for having me.
So first, let's start there with the AI trade that has absolutely fueled so much new vigor into a theme that investors who were perhaps a little bit more passive are now becoming a little bit more active about here. How much more legs do we think the AI trade has at this juncture?
Oh, I think the AI trade has plenty to go, right? We're sort of at the beginning of this. If AI takes off in any way, in any of the ways that we expect in terms of increasing productivity, enabling companies to change the way they do business, we're going to have a huge demand for AI. So we're just at the start of this. I think what's going on, of course, is that there's a lot of focus around Nvidia. And so where goes Nvidia, folks think goes the AI trade, which is not necessarily the case, right? This thing has to broaden out much more.
Where would that broadening kind of start to take effect from your purview?
Yeah, so I mean, to start with, I think you're still looking at companies that support AI in terms of needs semiconductors, for example, right? Equipment manufacturing that's necessary for AI. Energy, of course, has been a huge theme this year around AI and the expectation that we're going to need massive amounts of energy to power this. So if you think about some of the international spaces where some of this stuff is made, and they're maybe not priced so stratospherically as what you're seeing, in cases here in the U.S., that's one way to play it. I would say to be very careful, though, about AI washing, right? And this notion that, I'm an AI server, I'm an AI this or AI that, right? I mean, putting the words AI in your earnings script is a good thing, so everyone's doing it.
Yeah, Facts that's been tracking the number of mentions, and it seems quarter after quarter that they're saying, hey, once again, this is a new record quarter for the amount of mentions of AI on earnings calls. All these things considered here, one of the other major themes or catalysts, if you will, that investors were tracking coming into the start of this year, and they're going to continue to track going into the back half, is the policy pathway for rate cuts. What is your best estimation of when that will start to, or if it's impacting people's playbook?
Yeah, it's definitely impacting the playbook, I think, for sure. So much in terms of our economy is interest rate sensitive and starts with, what's going on with interest rates. I think small caps have had a lot of pain, for example. They're known to be more interest rate sensitive, and that's hurt them the higher for longer. So I do think, that monitoring of exactly how many cuts, I think, look, everybody kind of thinks we're going to get some start on the rate cuts this year. It would be an odd play to get moving too early on rate cuts, considering where our economy is. I mean, GDP is, it's good. It's not the blowout it had been for a while there, but it's good. Unemployment's fantastic still, right? I mean, there's really not cracks there. So with the market doing very well, GDP kind of remaining pretty good, and unemployment low, employment strong, it's really hard to make a case that we need rate cuts right away. That being said, in a re-election year, the Fed usually cuts rates. So we should expect some. So is it one? Is it two? Betting odds probably one before the election, one after the election, but there's a lot of data to come in between now and then.
Is there a good election rule of thumb that investors need to remember as they're trying to really navigate what could be some potential volatility, as UBS had put it, in some of their election watch coming into that general election?
Yeah, look, I mean, the empirical evidence, looking historically at what happens in election years, there hasn't been a lot by way of correlation between the party in power and whether markets in general do well. Although much attempt to, create something like that, right, and find that kind of a link. But that being said, of course, this election in particular, there are clear winners and losers that the market, in fact, you have whole country economies, markets kind of moving on the basis of this election. So, China versus India, right? Trump wins, not good for China, maybe not good for Mexico, good for India, and vice versa. So the idea of this nearshoring and Trump kind of coming in and with much more massive tariffs. So I think when you're looking within countries and within sectors, yes, there are clear winners. Financials got a big bump after the debate. I think we can all, kind of point to why that was the case. So, as you're looking at the second half and you're judging where you're going to be in terms of the market, the other thing I would just remember is, look, the market prices this information pretty quickly into the prices. And I think a lot of times people forget that.
Yeah.
So the price has to reflect both the potential outcomes and the probability all in one number. So it's going to move at least to a certain extent to what the expectation is. And then when the actual the event happens, the rest of that movement tends to happen. So getting ahead of that is a very difficult thing to do.
Dana, great to have you here in studio with us. Thanks so much for kicking off the second half of 2024 with us. Appreciate it. Dana Doria, who is the Envestnet Co-Chief Investment Officer. Great to see you.
Thank you.